Welcome to your Tuesday evening stock picking fisticuffs, your fix of share shootout on a Tuesday night here on CNBC Africa, first in business worldwide. I'm Bruce Whitfield, I'm the judge, I'm the jury, and I am the executioner, the brutal final arbiter as to who stays and who goes here on the most vicious stock picking show on TV. Well, what do we have in line for you this evening? This is share shootout, and how did Robert Mugabe really get re-elected and become deputy chair of SADC? Is Cosatu headed for a banana peel? And just how many unions does London have to recognize before productivity gets back into some kind of fashion? We don't have the answers to any of those, but what we do have for you, what we can control, we do have our 3-week champion. Introducing the champion with 6 appearances, 1 loss and 5 wins, Mark I Make a Mean Ravioli Witten from Kaizen Asset Management, and the challenger with 7 appearances, 5 wins and 2 losses, Gary I'm So Tall I Can See the Future Booysen from Vunani Private Clients. So for the next 30 minutes, both stock pickers will fight it out for the title of Share Shootout King. Both of our guests have pre-picked 3 shares. They're keeping them very close to their chests. Neither knows, of course, what the other holds, but at some point during proceedings, they must accept at least one of their competitor stocks. And the longer they leave it, the more likely they are to have to try and justify to their spouses, to their loved ones, and to their children at some point in the future why they had to choose something they really didn't like. It's a game of strategy, it's a game of chance, and it's a game of thinking on their feet. So each has got 30 seconds to argue their stock pick. Let's let the share shootout begin. Mark Whitten, let's go with you because you are the reigning brain, the reigning champion. I'm fascinated in all 3 of your picks this evening. I'm looking forward to see how you justify them as we go in for the battle royale tonight. The banking sector has been a tough place, and we've seen it come through in results. ABSA's had results recently. We've seen the Standard Bank results recently. There isn't much real growth happening in the economy. Banks generally need that. One group, though, that has succeeded better than others at stealing away customers has been FirstRand through FNB. 30 seconds, why?
I think, first of all, look, FirstRand is the strongest brand in the market. I think FNB and Westbank have very strong momentum. There's been a lot of focus on client acquisition, which they've successfully managed to, attract clients from the other banks. If I look at it from a valuation point of view, that's one of the highest, is the highest ROE in the South African banking sector, the ROE of over 21%. As price to book is looking reasonable again at about 1.5, 1.6 times. We really like management, and I think it's a very exceptionally well-run bank. It's a strong business model.
Okay, I saw the share price fall in the weeks after the announcement of Michael Jordaan's departure. It was over 30 bucks. It fell to about 28 rand. I wondered if there was a Jordaan premium built in. Share price has recovered, but not to the heady heights. Isn't there a concern as Michael Jordaan? So he's starting to pack his bags to go and sit on the board of the JSE, drink wine, and maybe do a course or 2 in America at some innovation hub, no doubt somewhere. But isn't he a big loss?
No, look, potentially he has been there for a while. He has been part of the innovation. I think that there's a lot of depth in management. I think the new CE is definitely very strong. There's a lot of good feedback from the market. In general, the banking and retail sectors have been hit very hard by what we see as mostly the foreign hedgies coming in and selling the sector. That's not a FirstRand specific story. So I think if you look at the retailers are down almost 20% year to date, the banks are down about 15%. So I think, at this point in the cycle, we think they're starting to offer certain businesses, certain companies within those spaces offering a lot of value, not all of them.
Well, if Gary nodded any harder, his head would come off his shoulders. You like FirstRand?
I do. I think everything Mark said is spot on. I mean, maybe perhaps a little bit pricey. And I mean, you've also got, you mentioned retailers, but FirstRand trying to bridge that gap between a bank and a retailer at the moment. But they
sell more electronic goods, more of these things than Incredible Connection, any other retailer in South Africa. They have sold 100,000 smart devices, courtesy of their very innovative plans, tying people into bank accounts and getting people to transact online. It's been fiendishly clever.
Definitely, and I think they've done exceptionally well on the logistics of actually getting product to the market. So overall, yeah, I think FirstRand is good. I'm not going to shoot it down. I mean, it's out of all the big 4 banks, it's our preferred in the sector. So
okay, of the banks you prefer it, but would you ordinarily be buying a bank at this point?
Yeah, I think they have sold off a little bit. So, I mean, you are getting some value. And as long as you believe in a turnaround story, and as long as you believe that we are going to get better GDP growth and we're not going to be stuck at a 0.9%, I think banks are offering value at this stage.
But where does the next big idea in banking come from? They've tapped out. They've exhausted their markets. And this is the thing that flummoxes me about people willing to buy bank shares, is who's going to borrow the next rand that and repay the interest and repay the capital into the future? They've tapped out mortgages and car loans and credit cards and micro lending. What's next?
I don't think that, look, truthfully, I think that they are still attracting a lot of clients from other banks.
So it's a market share story rather than anything else.
That first of all. Secondly, I think they are very selective about how they're moving into Africa. They're doing it quite slowly and carefully. They're not just running for the running for the big acquisitions like some of their competitors have done. And I think, we have seen very strong double-digit growth in volumes in their, particularly Westbank and the vehicle asset financing side, and also on the they've moved into a higher quality unsecured loan type customer. So I think going forward, it's definitely going to continue with that momentum. For me, it's a relative play. We don't generally just look at something in isolation. Yeah. So a price to book of 1.5 times and a return on equity of at least 20 to 22% going forward. I mean, we comfortably see this company earning more than £3.30 next year. So it's on a 9 forward P. It's really not not punchy.
It's sold. He's got it. He's taken it. He's taking the first mover. He's taking first mover advantage. Let's move on to Gary Booysen then from Vunani Private Clients. This is a company that's out of the FirstRand stable. It's probably one of the last great innovations of Laurie Dippenaar's tenure as chief executive at FirstRand. And of course, you're a big fan of Discovery Holdings. In 30 seconds.
Yeah, Discovery. I mean, I think it's the fundamental business model. We do actually prefer insurers over banks anyway, but I mean, it's stable, and I mean, their ability to cross-sell their products, they're proving themselves time and time again. I mean, their vitality and their health business is obviously their core, very cash generative. And now they're moving, their move into short-term insurance and life has gone extremely well. Got a few irons in the fire offshore as well, with Pru Health in the UK and the Ping An and now the AIA in Malaysia, which I think gives them a nice ability to export the South African business model to like-minded economies.
Something you said a moment ago, we prefer the insurers to the banks. Now, insurers are a proxy for the market. We see their fortunes wax and wane with the levels of the market. It implies that you're bullish on the levels of the overall market, because as market values go up, assets under management grow, fees grow, these insurers make killings. Yeah. Is that the pretext under which you're saying you prefer insurers to?
Yeah, at the moment, I mean, I think the bull market is getting into full swing, and I think
the bull market is getting to full swing. Headline, please. We need a headline. The bull market quote is getting into full swing.
So I mean, I mean, the general market maybe is looking a little bit toppish, but I mean, this can go on for another year or two at least, and for that time, I'd like to be holding something like Discovery. But Discovery is also not just a story of how they're investing their assets and market growth, because if you look at them over the last 11 years, I think they've grown their earnings from something like 14 cents to 430. It's like 3,000% growth. And I mean, that isn't just because the market went up 3,000%. That's because they are incredibly innovative and very good at what they do. And I think they will continue in moving offshore doing that.
Can't argue against that, but is the investment proposition attractive enough for Mark Witten to give you the thumbs up on your first pick? I only wish that I had a time machine and I could go back 10 years to when they were fighting with the medicines, with their regulator, and the share price plummeted all the way to 6%. The capital adequacy was being challenged and they were under a huge amount of pressure. And the share price plummeted to about £6. If we bought it at £6, we'd be on a beach, not talking about shares.
Yeah, look, for Discovery, truthfully, has been a core holding of ours for quite a while. We actually really like the business model. I agree with what you said. The only issue with these kind of companies is you know what your assets are, you just don't know what your liabilities are. And that's always been a bit of a concern. It has run exceptionally hard. It is standing out in the sector as a bit expensive relative to its peers, but they have targeted the likes of Ping An, the faster growing emerging market. We really do like management. We think the Vitality product is an excellent product. So it's very hard to shoot it down. If I'd chosen something earlier, let's say this was the third share that we were hearing about, I would have to say that, well, just on a relative valuation basis, it's expensive. Yeah. But at the same time, I do think that the growth outlook is, South Africa's public health service is just really, it's not great. I mean, to put it nicely. So you will always be driving people towards private healthcare, until they get that right. I think the market has still got a way to run, so I'd have to say I'd have to hold it. I'd have to pick it.
You're going to pick it. You're going to give it. Okay, so Gary, you get the first mover advantage there as well. Okay. It's going to make this game a lot more interesting. I always like it when the first stocks are picked, because it makes arguing against the other sitters that much harder. Right, so Mark Witten, you chose the best bank in the market. You thought that was a really good idea. Yes. Probably the second most challenged bank in the market at the moment is Standard Bank. It's lost some very senior talent in recent times. Peter Wharton-Hood, the latest person to leave the bank and go and join Deutsche Bank. Here you've got Standard Bank. It is trading at a very low multiple. It's never reached the price that the Chinese investors ICBC paid shareholders 5 years ago for 20% in the group. It's languishing in the mid-teens, mid-100-teens. Where's it going to, and why do you like it in 30 seconds?
We actually think this is a short. We think we'd be short Standard Bank. I think the earnings momentum in the first half was very disappointing. And I think, as much as you say it looks cheap, it's trading at a premium to FirstRand. So they're actually on the same price to book, but their ROE is around about 13%. They've had a big restructuring on the international business, and that I think is kind of still operating in a very difficult environment. I've always said, it's cold in the Antarctic. I don't need to go there to find out. I know there's troubles in Europe. Africa's not really responding. So from our point of view, we also don't like the dual CE structure. It's kind of who's actually running things. And like you mentioned, there's been an exodus of some very strong management.
I'll give you more than 30 seconds just because I'm liking what you're saying. Okay, a short on Standard Bank.
A relative short against FirstRand.
Okay, now again, you've got to explain the difference between going long, going short, and then a relative short to FirstRand.
Well, you're just buying FirstRand, going long, so you own it, and then you're funding it by shorting Standard Bank, betting it'll go down. And all you're saying is that the earnings momentum, that FirstRand will grow its earnings at probably twice the pace that Standard Bank will grow it.
But you see, historically, and you go back and you look at the multiples of the banking sector over the years, they always trade at relatively the same multiple. There's the assumption that a rising tide lifts all ships, and banks don't tend to trade out of kilter with one another. And that's the bizarre thing. Unless they massively underperform, Standard Bank is disappointing, but it's not in trouble, Gary.
No, I think pairs traders would probably disagree with you, Bruce. I mean, I think there's an argument to do a relative trade against it, but that's it. I mean, we're directional traders, and looking at it and saying that I'm going to go short Standard Bank and actually expect that to fall, I think it's a massive stretch. I mean, I think you'd probably be better positioned. I mean, I don't know how you weight your financial exposure, but take a smaller position in FirstRand and leave the Standard Bank short off. But I know you are a relative manager, so there's a case to be made for it personally. I mean, if you're a punter out there and you sort of hear that and say, well, I'm going to go out and short Standard Bank today, I think you're crazy. I mean, that's like shorting Growth Point or something like that. I mean, you're taking one of the most stable shares in the market that pays good dividends and going short. I mean, it doesn't make sense to me.
But this is a trading strategy rather than an investment decision.
I just think within, you look at the banks we have, out of the four big banks, then you've got the Ables and Capitex. FirstRand stands clear head and shoulders above the rest. Nedbank seems to have turned things around, gotten its act together, it's really moving in the right direction. Standard Bank's it's like a huge bus trying to make a U-turn. It just doesn't seem to be able to fire on all cylinders. And ABSA's kind of just seems to be going backwards at a rate of knots. But I still think that Standard Bank to me is overvalued relative to the sector. It shouldn't trade at a premium to the banking sector when its ROEs are actually the lowest in the sector at this point in time.
My question is, in isolation, Standard Bank has a short. Would you expect to make money on that play? If you were short Standard Bank?
I would, to be honest with you. I think if there's going to be more stress in the consumer, and I think if we're going to see, they are losing clients, they are losing customers. So I think overall, if you look at what the guys have been targeting, what the foreigners have been trying to hit, it's been the banks, the retailers, and if there's another leg down, I think Standard Bank, to me personally, is the one that's going to get hit the hardest. ABSA, I think it's already in the base, and I think to short FirstRand, which is on a higher dividend yield and a much faster growing, earnings base, that would be the concern. But yeah, it is a relative play. So
okay, but so the short on Standard Bank, you wouldn't accept it.
I wouldn't
simply
accept it.
On the basis of it's an also ran. It doesn't tend to trade out of trend with the rest of the banking sector.
I don't think so. And at the same time, when they've got the with the ICBC really targeting Africa, them wrapping up all their operations, Latin America, UK. I think there's a good case that they will take advantage of.
I would love
growth.
somebody within Standard Bank without bringing accounting into the matter to explain to me what the real benefit of ICBC is generating from its relationship with Standard Bank, other than, yes, they're willing to take a 1,000-year view. Okay, that's fine, but we'll be dead by then. And, we need to see some sort of short-term return. So your short on Standard Bank is shot down. He's always getting us on his shorts, isn't he? Mark Witten from Kaizen Asset Management. FirstRand gets the thumbs up. Standard Bank short gets the thumbs down. Gary Booysen, let's look at your pick number 2, please. This is a company that people only really began to hear about this time next year in the aftermath of Marikana, and it's called Atlatsa. Atlatsa is a platinum producer. It comes out of the Anglo-American stable. In 30 seconds, why do you like this one?
I think, if you're looking at the platinum market in general, I mean, this is obviously a recovery play. They owed Amplatz what was like 3 billion. They've now reduced that debt down 80%, so they've got very manageable debt levels. They're using any cash they generate to pay down debt anyway. So it is a recovery story straight away. But looking at the asset that they've got, the Bokoni asset, it's an open cast mine. It's incredibly cheap. They're on the Eastern Limb mining of Merensky, which is very high grade. They're looking at doubling production in the next 5 years, and this is all in a context of Amplatz, all the big platinum miners scaling down on production specifically to boost platinum price. I think they're going to take advantage.
Will they, Mark Witten?
Well, I think there's a lot of moving parts to that equation. I mean, first of all, you have to have Amplat scaling down, which the government's kind of forcing them to fund their social development program. They can't retrench.
But they are scaling down. They are retrenching 6,000 people underground and another 900 above ground.
They say that, but it's taking a long time. Plus, they're not really retrenching. They're moving them to their open cast mine with the Mogalakwena mine, the open cast mine, which is also running at a much lower cost curve. I think platinum itself, the question is, number one, are you going to see an auto recovery in Europe? Which I don't think you're going to see that, because platinum goes mostly into the diesel motors, not petrol, which is China. Secondly, the States, if you look at Tesla, which is now an auto electric car manufacturer, that's getting a lot of traction. I think from our point of view, it's more that the cost curve rises quite strongly within the platinum space. The junior miners have battled, and you've got to ask yourself, why did Amplat spin this asset out, considering if it was such a great asset? So I think between labor issues, the steep cost curve, etc., I think if I was going to play the platinum sector, I would prefer to be in, a player that I know is potentially run very well, like Chris Griffith running Amplats. I think Implats is in a lot of trouble. Lonman's got one real mine that you're always betting on that in the smelter. So I don't know much about the company. We don't tend to trade outside of the large caps. So I look at the Lonmans, Amplats, Royal Bafokeng, etc. Our preferred entry to the space is Amplats. And I think from a liquidity point of view also, it makes it very difficult to trade this counter. Plus the management, what kind of history do you have on this business? So I'm not quite sure if the asset is as high grade as they think it is.
Last attempt, you're on death row. The IV drip is in your vein. There's a man with a mask about to stick a cocktail of drugs into the IV.
Okay, I'll try and answer all, I think, 5 points as quick as I can. Okay, one, Amplats hasn't completely given up. They've still got 49%. So they still do believe in the asset. They just have they've just taken control of it. Labor issues, they have very few labor issues at this mine, specifically because labor is drawn from the surrounding areas. And it's one of the only mines in South Africa that hasn't got AMCU as you sort of breathing down their throat. It's not the majority union on the mine. So they've had very little labor disruption, I think, and especially if you look at their safety record as well. I think it's 2 million hours without incident at the moment. So, very, very well run. As for management, they've just really gone back and brought in a guy called David Stander, who was on that mine specifically from 2000 to 2005, that went out and actually joined Implats, but they've now brought him back because of his operational capacity. I think management on the mine at the moment is exceptionally good, and they've shown 5 quarters of improvement. So,
all right, he's sticking to his story. You're not convinced. You're shooting it down.
No, but the truth of the matter is, it makes a compelling case. I don't know enough about the business, to be honest with you. It's a small cap. It's a junior miner. B, I don't know what the
Which
earnings
is precisely why he did it, because he plays dirty.
Well, I don't know what the earnings outlook is. I can tell you that Amplat should earn 30 Rand next year, give or take, depending if you look at where their cost curve is and if they manage to grow that open cast mine. I've got no real feel for what this company should. I haven't, from what you've explained, I haven't got any feel from what the company should.
Strategically, you're shooting it down, though.
I have to shoot it down, yes.
You have to shoot it down, but mostly because he's ignorant of this particular company. Both our stock pickers have saved their best stocks for last, or have they? What we've got from Gary Booysen from Vunani Private Clients is the big thumbs up for Discovery. At Latza Resources, very compelling arguments, strong arguments being made. Mark Witten, however, from Kaizen Asset Management says, look, I don't know it well enough to put my money into it. So on that basis, I'm shooting it down. Mark Witten's picks FirstRand, the big thumbs up. Standard Bank, he put a short on it. Gary Booysen believes that you've got to be a little bit mad to bet against the momentum behind Standard Bank. You could lose money if you short it. All of that coming up with more in just a moment here on Share Shootout.